Hi, my name is Christina Strickland. If we haven't met yet, I'm the managing partner of Rally Wealth and Benefits. And today I have Tatum Schuler with me. Tatum is a senior wealth manager on our team. And we're going to talk specifically about portfolio rebalances and how we invest also new money coming into our portfolios. So, if you've been with the Rally Wealth and Benefits family for a while, you know that we do rebalances twice a year, specifically for IRAs and Roth IRAs, a little less frequency for taxable accounts because they have tax considerations that we need to be aware of. If you're newer to our family, then you maybe have just had new dollars invested. Maybe you had a rollover from a workplace retirement plan, or you had just a check that you wrote. So we just wanted to take some time, Tatum and I, to discuss the research that goes into how we build portfolios, the rebalance process, and what to expect from a client perspective. So Tatum and I, we're just going to get right into it. So we do reviews with our clients, and we talk through, normally in the review at some point, hey, we have your risk level as XYZ, moderate, conservative, growth oriented, fill in the blank, right? And normally, as a part of that conversation, we talk about when's the last time we did a rebalance and when's the next rebalance due. So, talk to me about, if I'm a current client of Raleigh Wealth and Benefits, what does a rebalance mean to me? But where did that come from? What are we doing? What's the point?
Yeah. Let's use a moderate risk level.
Okay.
You're a client, and that's what we have assessed you to be in.
Mm-hmm.
So you have that portfolio, and you're invested in a lot of different things. When we're looking at that rebalance, we're also looking at all of the different positions that are going to make up that portfolio. Because if you think about what is portfolio construction and management, it's a lot of different, hopefully, it's a lot of different
Right.
types of
Right.
investments, different asset classes, both US and international, large cap and small cap,
Mm-hmm.
different types of fixed income. And so there are many different asset classes. So when we're looking at the portfolio construction part of it, and what then subsequently what you're invested into, we're also, when we're analyzing that and doing the rebalance, we're looking at, are the things that you're currently invested in, do they make the most sense to keep in that portfolio?
Right.
So we are analyzing your large cap position, your small cap position, and we're trying to find best in class,
Mm-hmm.
because there are winners and there are losers in every one of those
Sure.
asset
Sure.
classes. So we're going to try to have the best in class, uh, while also trying to look at inside of each of those different components.
Mm-hmm.
What do they cost? Because every fund that you're invested into is going to have an internal cost. So can we keep that as low as possible?
Right.
Because the less it costs, the more you keep in your pocket.
Mm-hmm.
We're also looking at what's something that I look at is called tax drag. If it's an inefficient fund because it's distributing gains or
Right.
dividends or interest back to you as the investor,
Mm-hmm.
that can get passed along to you on your tax return.
Right.
So is it efficient from a tax perspective?
Mm-hmm.
We're also looking at historical returns. Has this manager done a good job managing this?
Mm-hmm.
And when we're analyzing all of that, for you, the client, we're trying to get your portfolio not only at the proper risk level to where we've designated you at, but also trying to put together the most cost effective, efficient from a tax perspective, and get you the highest reward from a return standpoint with the least amount of risk.
Mhm. And I think that one of the things that's interesting about that is I've had a conversation with a client for many years now that will look at their portfolio and they'll say, "Hey, I noticed that this mutual fund is not doing as well as the others," right? And so one of the things that the conversation is around the rebalance is, while we're obviously looking at performance, that's the goal of investing, is to gain money. Um, we know that we can't predict the future. We know that investment carries risk, but we do use historical data to help us make informed decisions about what we would expect moving forward. But talk to me about, in the rebalance specifically, or when you're evaluating investments, while maybe a particular investment could maybe even be negative at the time of the conversation, we don't just automatically get rid of it. Talk to me about kind of what your thought process is when evaluating investments, specifically as it relates to performance, knowing that no one has a crystal ball, we can't guarantee the future, but in the investment committee world, what is it that we're working through?
Yeah. And, I think the last couple of years, you've seen the technology trade
Right.
do very, very well.
Mhm.
And so most of that exposure in a person's portfolio has come from the United States large cap
Right.
area. And so you'll see a lot of portfolios out there that get concentrated in that area.
Mhm.
The question becomes, is that too risky then to
Mhm.
you as the individual from the portfolio standpoint in general? And so we're looking at those areas that maybe have done very well right now
Mhm.
as part of the rebalance. A lot of times you're trying to harvest those gains and take them up to lock in those gains.
Mhm.
There's going to be other areas of the market. You mentioned it maybe is negative
Mhm.
currently.
Mhm.
It could be out of favor for any number of reasons. It could be global economic conditions. It could be interest rate
Mhm.
environment.
Mhm.
Something has caused that particular area of the global markets to be out of favor.
Mhm.
I've always likened it to, uh, Black Friday. If
Mhm.
you're old enough to remember the big
Mm.
newspapers that
Yes.
you would get with
Mhm.
all of the Black Friday ads,
Mhm.
every store was encouraging you to come shop at our store because we're
Yes.
20, 30, 40% off.
Right.
Investing is different. People want to invest and stay in the things and buy the things that are more expensive.
Right. Well, there's that fear of missing out.
It's a fear of missing out, and so with rebalancing and investing in general, we're also looking at maybe the things that are on sale
Mhm.
and that we can find value in
Sure.
because historically, markets tend to all asset classes over time historically have gone up.
Mhm.
So if we can find things that are maybe out of favor, on sale at a better valuation of things that have done well, that's what's going into rebalancing. So we're going to maybe move some things out of the areas that have done well
Mhm.
into the things that on paper look like they maybe haven't done well, but we're hoping for the future appreciation.
Well, and I think that the thing is through the analysis, if you can determine that the underlying bones are there. And
Yeah.
when I say bones, because I to me it's almost like buying a house, right? If I can buy the cheapest house in the neighborhood but still has good bones, yeah, I gotta slap some paint on it, put some new carpet down. But if I can buy it on sale or buy it at a reduced price, I've got built-in equity already, right? Because if I believe that a future valuation will be better, um I've got a good equity immediately. So same thing, like take, for example, a mutual fund that maybe it should normally cost $200 on like a 52-week average, but maybe right now it's selling for 180. Why not? If historically it's worth 200 and I can get it for 180, the math is the math. Theoretically, I've got a value of 20 bucks in there, right? In that spread. Um, so I think that's a lot of the analysis that you're looking at is it's the prices. If it's a good buy, great, but also is the structure there
Yeah.
or the criteria that you're looking for there. So that's the rebalance. We typically do those twice a year.
Correct.
Um, you and Kirsten and myself and Joe and Bruce kind of all speak into that a little bit, but you and Kirsten I think do, gosh, 98% of the workload on that, if not 99. So that's the rebalance. Talk to me about as a client, what do you expect? You're getting like confirmations or how do clients know this has happened?
Yeah. So during your reviews,
Mhm.
we're going to try to share with you
Sure.
when that next rebalance is coming up and what to expect. So, hey, we've got, we're meeting with you in say early June.
Mhm.
Um, our next rebalance is targeted for the July timeframe.
Sure.
We're going to share.
Mhm.
This is coming up.
Right.
Here's what you're going to expect. You're probably going to see some trade confirmations
Mhm.
coming through. We're going to keep you at, say, that moderate risk
Right.
level. And so we don't want, because most people today are set up electronically, but there's
Right.
some set up still getting paper confirmations.
Mhm.
If you get inundated with those, we want you to know there's a reason for
Sure.
them coming.
Mhm.
And so we'll try to communicate that the rebalance is coming.
Mhm.
But then outside of that period,
Mhm.
say you're investing money
Mhm.
into your portfolio on a regular basis.
Right.
we want to know where in that portfolio
Mhm.
that money needs to get deployed to.
Mhm.
Sometimes it makes sense to kind of broadcast it across the broad portfolio. Other times it makes sense that put it in a targeted area because it's, again, maybe it's on sale or
Mhm.
we want to catch the momentum. Every time it's a little bit different and the client's needs and situations call for different solutions. If you're taking money out,
Mhm. Mhm.
maybe we want to harvest the gains out of a certain area
Sure. Yeah.
because, again, there are asset classes usually that have done a lot better at certain periods of time. Maybe we want to take it from there.
Mhm. Mhm. Yeah, and I think that that's a big part of the overall, we talk about a rebalance and we have risk-based areas that we think are appropriate for specific clients, but I can't highlight enough how individual it still is, right? How there's still very much that conversation in regards to each client household of, you know, what's the expected distribution this year and over the next several years? Are we thinking about doing Roth conversions? Are we adding money every month? Are we getting ready to have a kiddo go to college? Or we know those things.
Yeah.
And so as we're doing the rebalance for each household, that's something that we're taking into consideration. And as we meet as a team and saying, hey, this household is due for a rebalance, we kind of look at what's in their world, what's on the horizon for them, and how would this rebalance impact them, and do we need to make any tweaks? And so that's part of the reason that we talk about it so much and it feels like it takes forever to get done is because there's so much work on the front end to make sure that the investment analysis is done, the tax planning's done, the individual planning for the families are done. And so it's a huge, huge part of what we do. But, twice a year on average. But here's the thing, there's things that come up outside of twice a year. So Roth conversions being one of them, or getting ready to retire, or, getting ready to buy a new house, or in XYZ, you name it,
Yeah.
process that a client's getting ready to go through that this impacts. So, twice a year in general. And then can you also talk to me real quick about for our newer clients who have maybe transferred assets into Rally Wealth and Benefits, specifically a qualified, an IRA, a Roth or traditional, whatever's going on there, that came over in cash.
Yeah.
Talk to me about what that looks like, because that's not a rebalance. That's brand new cash.
Yeah.
Or even just a client who says, "Hey, I sold my house and I'm going to go live the RV life for several years. Here's a couple $100,000." What does the investment process look like for that?
Yeah. And so obviously we want to assess what the risk level is and
Mhm.
what portfolio model that you should be in.
Right.
But then you think about, okay, I've retired, I have this 401k, the check is coming in.
Mhm.
And so it's interesting over I've done this, I'm coming up on 25 years.
Mhm.
And how people feel about that, that life savings
Right.
going into the market
Mhm.
all at once.
Right.
And how market conditions can play into the psychology of what that looks like.
Mhm.
Um, you think about retiring during a 2008 period when the
Yeah.
markets are on fire
Right.
and people not wanting to invest that money
Yes.
into the markets because everything is free fall. They feel comfortable in that cash.
Right.
We've had other periods here, not in, kinda today,
Mhm.
where the markets are at all-time highs
Right.
and thinking, "Well, I don't wanna buy in right now
Sure.
because everything is so expensive."
Right.
And so the psychology
Mhm.
plays a part into, I think, the conversations that we're gonna have.
Mhm.
There's nothing wrong with dollar cost averaging that money in over a period of
Sure.
time that you and the client agree upon.
Mhm.
There's also on if the markets are on fire
Right.
to the downside,
Yeah.
again, you're trying to look at a long time
Sure.
perspective and buying a lot of things on sale right now could really be have a long-term benefit. So talking the client through that. If you're investing at an all-time high,
Mhm.
usually the markets are at the all-time high because there's been some momentum
Right.
behind that, and there's actually some studies out there that say your returns can be a little bit better if
Mm.
you even if you invest at all-time highs because that momentum can
Sure.
continue.
Right.
And so, I and again, there's no right a wrong answer or approach in my experience. It's really just talking to the client, what's going to allow them to sleep at night,
Hmm.
helping counsel them, educate them, giving them some perspective, and not let emotion dictate
Hmm.
how and when that money gets
Mhm.
invested.
And I want to clarify for the our friends in compliance that are going to hear this because I we talk about sleep at night and what I want to clarify because that could be construed as a promissory, hey, we're going to have great returns and that's not what we mean. What we mean is that you're comfortable with your plan.
Yeah.
We mean that our clients are educated and our clients understand as their advisors how we are partnering with them to put steps into place to help work towards achieving their financial goals. And so just want to put that out there because I do you and I both we say sleep at night and we're like, "Oh, we get dinged because we're not saying, hey, everything's great and it's always going to be blue skies and rainbows." What we're saying is we feel very confident about the work that we've done and the planning that we've done and the research that we've done. And we want to make sure that our clients are educated and that they understand what it is that we're doing and why we're doing it. And that's what we mean. But I just always have to throw that out there because I always get that little bug that's like, you can't say those words. And I totally get it. But at the end of the day, we're just trying to talk to regular people and we're trying to make sense
Yeah.
of investing. So,
Yeah.
uh,
I always tell the client that our job is to arm you with enough information to make the most educated decision that
yes.
you can make so you're comfortable with it.
Right, exactly. Yeah, we don't want anyone to be uncomfortable with what's
So,
going on. So, or feel like they don't understand it.
yeah.
So, okay, so that's the basics of new money coming into portfolios, rebalances. So if you're seeing this video, it's because we've sent it to you, meaning you're in the process of getting rebalanced or you're newer to the Rally Wealth and Benefits family and so we just wanted to take the time to explain it to you. If you have questions about your portfolio in particular, or just in general about Tatum's team and the research they do, you can reach out to your individual advisor via email or via phone call. Or if you don't know who to ask specifically, you could also just send an email to info@rallywb.com and we will make sure that that question gets directed to the appropriate person. So thanks so much for listening. We're so happy to work with you, and we just hope that you enjoy your day and we work together for many years to come.